Taking a look at today's interest rate markets, let's look at the 10-year note futures today as they're realizing a bit of a reversal here today. We are seeing the 10-year note futures actually trending lower later in the session after going to multi-month highs earlier in the session. Currently 134.21 in the futures market. And I think when you look at some of the factors or some of the reasons why we did see this kind of volatility or this reassessing of the markets today, there's a couple things. Number one, the storyline around inflation continues to be hotly contested or debated, I should say. And it does appear that you're hearing more and more market participants, market observers, global perspective that inflation is going to be transitory. That's yet to be determined, but that seems to be the general theme working its way back into the market here the last several weeks. Number two, the storylines come out of Europe overnight as we continue to see challenges with the COVID-19 variant and also some of the economic expectations and growth expectations. Helped create a bid in the Treasury markets this morning. And then we had some data points earlier in the session that pushed the Treasury markets to those highs of the day and multi-month highs. But as we did work our way through the day, the rotation that we saw yesterday in the Treasuries and out of equities really reversed quite substantially today, where the equity markets rallied very strongly today. And therefore, I think that persisted throughout the day, and that provided further selling pressure in the Treasury markets as we move through the session, and pushing them down towards the low end of the daily range. Now, looking at the yields, 121 basis points on the 10-year. Now 118 basis points is where it closed yesterday, so up 3 basis points day over day. We did see a low of 113 basis points intraday, though, so 8 basis points off those low readings. And when you look at the yield curve as a whole, we did see the back end shift higher. So they're selling pressure on the 7s, the 10s, the 20s, and the 30s today late in the day. So the entire yield curve did shift higher today, as we did see the front end of the curve basically stay unchanged for the session, and the back end of the curve sell off and pushing those yields higher on today's market action.